What's happening, guys? Welcome back to another Sunday Scan. I'm finally back on Sunday Scan. Big thank you to Nate, Anthony, Ariel, and Stan for covering Sunday Scan while I was away on my honeymoon. We had a great time. Everything's official, but it's good to be back, and we're happy to get into the scan for the week ahead. We have a very special guest joining us this week. We have the one Lance B, and it's kind of a running joke that he comes out of retirement every time that there's a massive move or some kind of chaos in the market, and we certainly had a lot of that over the last week. So we're going to discuss big moves around CRWV, around Tesla, and a couple of others that are just going to be very helpful for traders into the week ahead. We talk about a lot of trading principles and a lot of kind of timeless concepts that people can take and apply to the upcoming week and their trading in general. So make sure that you stick around to the end. We cover a ton of fantastic content. And so we'll get into that in a moment. But before we do, Traders for a Cause has a meetup in Columbus. I will be there. It's on this Thursday, June 12th. And so if you want to come hang out, you can grab tickets. We'll link the tickets in the comment section. So we hope to see everyone in Columbus on June 12th for that. And then the only other thing that I really want to cover before we kind of get into Scan with Lance is that this one move with Robinhood. So basically, we had a bunch of names and things that we're going to cover a little bit later on in the episode, but Hood in general is going to be something that I want to recap and then also watch into the week ahead with this move. So basically, everyone was expecting Hood and a couple of other names to be added to the S&P index on Friday, or that announcement to be made, and there was no announcement. And so as far as we know, nothing has been added to that index. But Hood was very positioned to be added to that. And so I think in the upcoming week, this will be a great example to really watch of when a stock was positioned to do something and that thing didn't happen. A lot of times, price action, it's based on assumptions. And when those assumptions have to reshuffle, then you can have some big moves. And just as a little bit of an analogy, I don't think it'll be this extreme by any means, but if you remember months ago, App had a very similar situation where it was anticipating getting added into that index, and then it did not get added. But in addition to that, you have some short reports against it. So it's a bit of a different situation, but you can see some of the big mean reversion moves that happened after that event. And so Hood will definitely be on watch for not necessarily a massive mean reversion, but I think that we could get down into the 60s if that plays out how I think it's going to play out. But I'll save those thoughts and those concepts for the main section of Sunday Scan. So before I bring on Lance, I will give the disclaimer that Lance and I are not financial advisors, and none of this is buy or sell recommendations. All of it is for informational and educational purposes only. Now let's go chat with the one Lance B. All right, we're very happy to have the one Lance B on Sunday Scan for the first time. Lance, welcome.
What's up, everybody? It is good to be here. I've done a lot of IU content before, but never the Sunday Scan. So this is a privilege and an honor.
Definitely. And I think part of the reason why I'm doing Sunday Scan as opposed to Nate is because of a conversation that he had with you about finding balance in his own life and everything, a year and a half, 2 years ago. So I should partly thank you for my segment on Sunday Scan here as well.
My pleasure, and I'm glad you're doing it. Nate and I, we actually had a breakup, and we only communicate via Grok now. It was part of our separation agreement. So I do not communicate directly with Nate, and he does not communicate directly with me, although he very much wants to, but I refuse to allow him.
You got to play hard to get with him.
100%, 100%. Otherwise, he just doesn't understand boundaries.
So, Lance, part of the reason why we really wanted to see if you would come on Sunday Scan this week is because you're known for kind of coming out of the woodwork when these big moves happen. And we've had a market where it went from being super chaotic to kind of calm with pockets of chaos. And I think that that's really what we've seen, especially over the last week. We had some major Tesla moves. We had some major moves with CRWV. And you did a fantastic video on CRWV, just kind of talking about how you want to really stick with the trend. It's kind of a special situation. You don't want to prematurely, go for the fade every single time, but really waiting for those big moments. So could you talk us through, what about CoreWeave really got your attention and made you want to make a YouTube video about it and really talk through some of your thoughts there?
Well, the number one rule of trading is always you want to be with the trend, right? And I think most people, if they had to start somewhere, it's just how do I define the trend? How can I find a positive expected value way to go with the trend? And then when does the trend change and what are those nuances around that? And that's something I've spent a lot of time talking about. And so CoreWeave was something where like a lot of people, just because of the kind of percentage move on such a large company and everything else, they will tend to fight the trend rather than ask themselves, how can I be with the trend to begin with? That being said, sometimes those trends can get long in the tooth and be in the later innings. And nobody really knows, are we going to go to the ninth inning, the eighth inning, the 10th? Are we going to go to the 14 innings or something? But I think there are a series of nuances that when you do go there, the probability of the trend exhausting increases. So if you see the CoreWeave video and you look through the comments, you will see a lot of people saying, oh my God, I can't believe it topped the very next day. And it's like, well, you might not be able to believe that, but I very much can, right? Because we were entering one of those final innings in very high likelihood. And did I know it was going to top the next day? No. Did it do exactly what I would have wanted it for it to be an A plus? Definitely not. But when you study the trend and a lot of the nuances that go into it, your probability becomes very, very, very far from random, right? Like I did not short CoreWeave a single day until kind of the top day. I mean, not that I felt like it's set up as some epic A plus either, but like that is the power of kind of experience in trading. And we can even jump into the chart if you want and kind of tackle some of the stuff that I saw on it.
Yeah, absolutely. And by joining the trend, by being with the trend, I think some people might be confused about that because it's like, okay, well, if it's something's been going up and you're looking for like a mean reversion or something like that, but it's really like going with the trend. It's just the path of least resistance. What is the stock already trying to do at that point in time? And then if it has the proper range, the proper expected value, kind of joining that as opposed to just, fighting it while it's still trying to go in one direction.
Yep. And then essentially you're joining the counter trend once it reverses, right? Mm-hmm. And so in essence, that's almost like exactly what the right side of the V is, right? Like if there's one concept I kind of became famous for on the interwebs, like it's really right side of the V. And what the right side of the V is I want to be with the trend when we're going up, but in those moments of kind of counter trend, like if I had to define this chart, right? Like, okay, initial leg kind of higher these 2 days post IPO, we then form just a range, like essentially we're range bound for the rest of it. Then around kind of, and I think this was when it initially had earnings, I think on the 15th, if I'm not mistaken. I think May 15th, this was an earnings bar. And then we kind of reversed higher. And that's almost like when we break out of that range. And so then the way I look at this chart is all of this leg here was kind of a leg higher. And then we attempted, in my view, kind of 2 small days of counter trend. We try to break out, have kind of 2 days of counter trend. Then we reestablish that big picture trend. We break out on this day. And this was when we really start to go. But then again, this day and this day are now counter trend. So right now, I view the trend as down. That could change on Monday, tomorrow, if we break above prior bar highs. But as of now, this, at least temporarily, is the high. And then we don't really know how far this trend will continue. And of course, it's reliant on what the overall market does. It's reliant on any news that comes out. But otherwise, at least from my framework of how I view price action, we are currently in the counter trend for this stock.
Yeah, absolutely. And, being in that counter trend, it's really just until your thesis is proven wrong or unless new information comes in, that's kind of your bias for now. And then you're sticking with that until the action proves proves differently. And then you would then maybe resume your thoughts about a trend in place. And I think we've seen this a lot with, these big moves, especially multi-month or even, up to a year moves with things like SMCI. And like you said, there's so many environmental factors that are contributing to this too. You look at things like APLD, NVIDIA, the general market. You have a lot of things kind of also trending in that direction. And so, these pockets of strong trends, overextension, mean reversion, within a broader structure, you really need to wait to see what is the action day to day, what bars or key levels is it breaking to really have a firm thesis to start, a trade plan from. Is that correct?
Yep. And so here's the thing. Like, the reality is most people learning trading, they don't want to be taught how to fish. They want to be given a fish. But sadly, that isn't how trading or life really works. And so one really great project or challenge for the IU listeners, who are far different than just the people that are just trying to be given a fish, my challenge would be type up all the really in-play charts, like whatever you're into, whether that could be a Tesla, whether that could be any high-flying tech stock that's gone crazy, like the old school, SMCI move last year, the MSTR move, any of that stuff. And I would challenge you to start to think about, like, okay, what are the ways on this chart I can define the trend? And just build a massive database of this stuff. So, like, there's ways to define trend using the moving average. There's way to define trend as far as, okay, we've got this is potentially the low. We've got a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then we notice how we get super euphoric here. So the rate of change, right? Here, all the bars are super small. The rate of change starts to accelerate. It really accelerates. Then we do that one mega euphoric leg. Then what do we know? Post capitulation, the trend is now changed, where this is the high, that's the low. This is the lower high, lower low, lower high, lower low, and so on. Then right there, that kind of breaks the big picture trend. So I'm always looking at these charts, and I'm trying to just view these things in legs and understand the price action, right? Where, okay, now the trend in this pocket is reversing. Here we're consolidating, but then we break those lows and a new trend is formed. That doesn't mean it needs to go a certain distance. It could literally, reestablish the next day. But such a good challenge and such a good little exercise is to go through all these charts, right? And that's kind of step one in understanding trends. But it's not all that's needed, because once you understand that price action, you then need to be able to capture it. And that's where it gets into, like, how do I build a system that overall on these charts starts to work? So it could be something, I'm going to short the break of prior bar lows, or I'm going to short even intra-bar if the price action justifies it, or I'm going to wait until a moving averages break. And there's so many ways to kind of build a system around this stuff.
Yeah, and that's actually something that you brought up in the video you did about CRWV. It's, there's many ways to approach the actual trade plan and execution. Is it basically waiting for that parabolic and then, stuff move, fail follow through, right side of the V? Is it, heavy against VWAP? Is it using moving averages? Is it prior bar lows? There's many different ways that someone could successfully have a positive expected value waiting for this kind of move. And then do you think that there is one right way at a moment in time, or do you think it's a right way for someone who has a certain kind of trading style, what they're familiar with? So if someone never uses moving averages, it doesn't make sense for them to start using moving averages all of a sudden, right?
Yeah. And so here's the beauty of trading, and what kind of really helped me initially fall in love with trading is you can have, and this is what's so cool. So I do advisory work for S&B Capital. And so I work with all their traders. I work with a bunch of other 7-figure, 8-figure traders. So I see the full gamut of every type of trader under the sun. So what you'll end up finding is there will be traders at SMB that have a lot of back-tested quantitative data as far as average trading ranges, the increase in volume, the number of legs, the percent move over time. And so you can have a quantitative trader say, this move is starting to get overextended. I want to start to position into this move. And there's going to be traders that just totally fade this move and don't have a stop. And there's nothing necessarily wrong with that if you have a bigger system of risk management. There's going to be traders that look for an intraday setup on this 6-5 bar, or they view this crack the prior day as kind of up, that's a tell. So there's going to be people that short on 6-4 and overnight it short. There's going to be people that trade it intraday on 6-5. There's going to be people that look for a daily swing and short the break of prior bar lows and then are giving that to prior bar highs, like I often kind of do. And so there's so many ways to find edge. But the most important thing is you need to find the way that makes sense to you, right? So if you're a programmer and strong with data and strong with mathematics, maybe the way for you is going to be using data to find edge. Or maybe you trade a lot based on sentiment. Or maybe you even scrape Twitter and figure out just how high is sentiment and what do extremes look like. And there's even people like Chris Camillo, right, who calls himself a social arb trader, where he's using Google Trends and TikTok to find what the big trends are. So the most important thing is, are you finding edge in a unique way for you and your strengths? Have you proven quantitatively that you have edge if you do this stuff over the long run? Then are you sticking to your strategy when it presents itself? So I might have edge where other people don't, and other people most certainly have edge where I don't, and we all can make money and trade things our own way in this beautiful world of markets.
Very well said. And it reminds me. So one of the people that I've studied a lot over the years, and before I was more active trading, I was more longer term stuff. And I studied a lot of Charlie Munger. And he had a concept known as the Lollapalooza effect, where when something was happening, there was usually many different factors all going in the same direction that kind of confirmed that. So you couldn't pin it down to just one thing. It was a very multi-factor thing. And I think what happens with a lot of traders is that you have a couple of traders who are using 2 or 3 of those factors. A couple of other traders are using 2 or 3 of the other factors. And there might be 15 factors total. And it's just people using different combinations of what they're comfortable with, all kind of looking at that scatter plot moving in the same way.
Yep. And I think there's so many different nuances that are necessary to help bring edge in your favor and positive expectancy into your favor. So I might be using an intraday chart for most of my decision, but then the daily chart will also help give the context. But then I might also use the level 2 box. I might also use data. So take even during the April tariff sell-off. Dr. Steenbarger, who does a lot of work with the S&P Capital, he sent out an email with a bunch of data because he advises a bunch of hedge funds. So he sent out a lot of data that he had sent to the hedge funds. And what it essentially said, like the statistics, the actual quantitative data was staggering over how likely a bounce was. Purely if you forgot the fundamentals and you forgot the actual news flow, the data for how fast and how far we had sold off, like over 1 month time frame, the data was so positively staggering that we were going to bounce. And even if we didn't bounce, the downside from there, at least historically, was so limited. Now, given I don't think that would have been the case if Trump didn't reverse his stance. Like I think the world actually would have been crushed. But I think like when you see the data, it removes any type of like news flow of panic you might fear, and like that's a powerful thing that can help inform a decision. And so everyone needs to find like what are the things that make sense to them that will help them stack just enough odds. Like the market's so efficient, so efficient. But if you stack enough things in your favor, then it starts to work. And the other beautiful thing I find is that like no matter what kind of trader you are, all of trading really follows the same principles for the most part. Like I can work with a quantitative trader, I can work with a qualitative trader, and the concepts like following the trend remain the same. The concepts like having a stop where you're proven wrong remain the same. The concepts of position sizing and all this stuff really remain the same. And even the funded traders that trade futures, I've been following just some of their strategies and just learning some of that content. And when I see what they're doing, even though it's something I would never ever do because I have no interest in trading the S&P every day, like they're doing principles that still reflect overall kind of markets that I would agree with. So it's all kind of pretty fascinating.
Yeah, I mean, successful trading, it's really like risk, reward, and probability, and just framing that in different ways through different markets, the different time frames, and everything. And I want to go back to what you said about the bounce that we had. I think that's a lot of times, and you know this better than anyone, especially after the Japanese trade that you did a while ago and everything too. It's the further a trend goes or the further a capitulation goes, it doesn't necessarily 100% have to bounce, but it becomes more and more vulnerable to a bounce. And then if you have not only, something that really is, tense and wants to bounce, and then you have a catalyst on top of it, that really seems to be when you get, those massive moves. And so if you're already watching it based on the statistics, based on all the things for the bounce, and then you're also watching, the breaking news, and that that's kind of what sets it off, then those really make for some powerful things. And then, what the NASDAQ was up, 11% and something like that day. So just those situations where you have the vulnerability to a large move and then a catalyst, those are fantastic trade opportunities.
Yeah. And I think a lot of that goes back to kind of really studying and mastering trends. What makes a trend, again, not certain to reverse, but what makes a trend more probable to reverse? Then also what makes a trend more likely to reverse with greater magnitude? You can start to study and systemize these factors. And so again, trading is always going to be about probabilities, just like poker or anything else. But it's how do you get those odds so far on your favor as possible? And so the truth is like the further this move went, the more probable a large bounce was going to be, and the more severe, the more sharp, the more just totally capitulatory, the more sentiment became an absolute -10 on a scale of -10 to +10, the more probable a bounce was going to be, and the greater in magnitude that bounce was going to be. And so, especially for the rate of change, I mean, this was one of the fastest moves in market history, up there with COVID and a couple other times. What was it, October 1987 or whatever? So it was a lot of things led to the definite potential for this to, again, of course, it was mostly the news catalyst that really did that. Like I don't think we would have done anything like that without that tariff pause. But nevertheless, the variables were definitely there.
Yeah, and then you were comparing the CRWV move, the reversion, a little bit to like the MSTR move that we had 6 months ago or something like that, and saying that CRWV wasn't quite as good on that reversion that MSTR was. And I think part of it ties directly into what we're talking about, where with MSTR you had a further extension, you had a Thursday, Friday, so the option activity was kind of prime, and then you had it start to fail. Then you had the short report. And so you had a confluence of things, again, vulnerable to mean reversion, catalyst, right time, and everything. And so I think that's why you had a massive A+ online there, as opposed to with CRWV, there was no short report against it. It was more just overextended coming back in. So the range was good, but not quite the same setup.
Yeah. And if I'll even kind of contextualize there, one of the best things you're saying in all those descriptions, which I think most people are extremely blind to on the retail side, when it's like the most important variable ever, whether it was the tariff reversal or whether it was this MSTR reversal, you're touching on the presence of there being a news catalyst. And so often, whether I want to do mean reversion or whether I want to be with the trend, a lot of that really depends on the presence of fresh news, where news is what can really re-rate markets. And so, yeah, I think MSTR this day was going to crack regardless. But then once you start to get like a Citron report, or on the tariff day, of course, you get the Trump tweet, like all of that is news often tends to be kind of, if you've got like the Tinder, you've got the all the other manly, masculine Boy Scout terms for what's about to be a large fire, often a news catalyst can be that spark that then really gets the fire going.
100%. I use the same way, another Boy Scout analogy, instead of a fire, I use like an avalanche analogy, where it's like you have a huge, snowbank or whatever that's ready to go. It just needs something to kind of kick it off. And then the momentum that is, that built up trend that wants to happen anyway, that counter trend, that's what allows it to unfold, or is the catalyst for it to unfold. So also speaking of some of these massive moves, and you brought up Tesla before, could we pull up the Tesla chart and talk through, some of those same concepts? Because I think it was very similar, especially, when Elon first tweeted about, criticizing some of the bill and everything like that. That is a new risk factor that re-rates the stock, and that allows the door to be open for conflict and for retaliation. And, right around that time, that was when the Tesla move started. And then it, finished, at least for this time frame, over the week on a capitulation on Thursday.
Yeah, I mean, what an amazing series of events, I think, just for the whole world to witness. And so even with Tesla, right? Like, I always want to look at anyone that follows my YouTube or some of my course stuff. They know that like I'm always first contextualizing using the daily chart, and I'll even zoom back a little bit, right? And I think where the interesting thing really happens is kind of right after election day when we had that gap up and people were like, oh my God, like, why is Tesla up so much? Is that really that big of a deal? And then we just saw the biggest rip, like not ever, because Tesla's had some crazy rips, but like it just explodes higher. And the whole prevailing, like, here's the thing, fundamentals obviously move stocks. Like over the long run, fundamentals are going to kind of matter, but more than fundamentals, like sentiment and the prevailing view is, and the prevailing belief system is actually like what really decides price action. Like it's not fundamentals that move things. It's just so much is sentiment. And so what we got was, oh my God, this Trump one is going to be amazing for markets. It's going to be amazing for business. It's going to decrease regulation. And Tesla is going to be a massive beneficiary of all of that, especially with Elon being best buds with Trump. And so we absolutely exploded. We put in somewhat of a euphoric top here. And again, so, as we talked about studying trends, this got a little bit euphoric. We put in the high. That's a lower high. Or sorry, that's a lower low, lower high, lower low, lower high. We then break that kind of range. And that's the new leg where we get lower low, lower high, lower low, lower high, lower low. And now, if anything, like all of this was a shifting in sentiment, because all of what happened was what appeared positive. Oh my God, Trump and Elon Musk are best buds and good for business. All of a sudden it was like, oh my God, like maybe this isn't so good for Tesla when Teslas are getting set on fire and all the crazy stuff's happening. And so sentiment here was just atrocious. It was Europe sales down 80%, Tesla's on fire, blah, 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 blah. And that kind of put in at least the sentiment bottom. We've got the tariff stuff. So this became the new range. And this day was kind of the key breakout of the range, this 5-9. So that's where all of a sudden, a lot of times it can almost be like the Titanic, where if you don't capitulate, it's just trying to reverse this massive ship of just momentum and everything. So this day here was a big reversal. And it's like, oh my God, bullish trend. We broke out of this range. This was kind of the high, low, higher low, we break out, then boom. And then this day was when, Trump started to speak out against the bill. And I was not smart enough to think like, oh my God, like this could massively unravel. I think if you had that thesis, like things panned out literally 10 out of 10, like I don't think most people would have assumed we were going to get the president and Elon Musk having just a open, blatant social media war like we saw. And so that's when Tesla, all of a sudden the beneficiary of Trump and his love and his spotlight, is now just like, oh my God, is Tesla going to get smoked? Because all of a sudden, due to this fallout, Trump is just going to fully target Elon and just fully target Tesla. And then all of a sudden, Trump's tweeting, I don't even want to own this piece of shit car, like, blah, 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 blah. Like, who's buying these shitty EVs? The only reason was because they were subsidized. Like the sentiment just turned so quick, so fast. And then that's what the catalyst for the sell-off was. And then, of course, it becomes like, how do I actually trade this on an intraday basis?
Yeah, 100%. And it's set up multiple times within that trend too. So like you said, from the first tweet that Elon started criticizing the bill, that was kind of like getting that counter trend in place. And then there was opportunities for a fade there. There was more of an opportunity on Thursday. It was hanging around that 300 level, and then it broke the lows. I don't think that the option profile was positioned for a break below those lows, and that was when Elon tweeted some more extreme things and flushed right down to that 170. And so and then the rebound after. And so I think just being really attuned to the stocks that are in play, the things that have magnitude. And you talk about that all the time, Lance, where you need to focus on the stocks that are in play, things with, abnormal news, abnormal volume, abnormal range, and that are vessels for traders. So could you talk about the importance of really focusing on the stocks in play?
I mean, here's the thing, and maybe I'll even like so much of Twitter. So here again, I've not been in the Twitter space forever, but here's simply my guess. Like I can't speak factually to any of this, but I think what happened is early in the 2000s, you started to get a kind of archetype of trader that focused on OTC stocks on the pink sheets. They focused on shorting some of those kind of OTC penny stock pump and dumps, and they did quite well doing that. Crowds like the Tim Sykes crowd, I think people made a lot of money kind of seeing the inefficiencies in OTC, many of which still kind of exists today. And I think then what happened is in the microcap world of stocks, listed stocks, that also existed. And a lot of that was your ability to get short locate on these things. And especially over the last 10 years, I would say the proliferation of ability to get short locate and multiple parties for locate and borrow and all that has just absolutely exploded. And so this niche of trader that had this massive advantage, I think for so many traders that were getting onto the scene, like this was like, oh my God, this is where I can kind of do that. And so especially on Twitter world, when I signed up and started tweeting and experiencing this world, so many people were just so crazy focused on, the low floats, which is fine, but then also like futures, which was probably even less fine. And they started to ignore all the other opportunities and take this super myopic view. And so there's markets where low floats are super active and you can do very, very well. If low floats are active, great, more power to you. The issue though, and I look like a fool to some degree just because markets have been so active the last couple of years, but there are times when low floats are dead for years and years and years and years, and you end up making no money and it's just the well has gone dry. And so meanwhile, they're missing some incredible opportunities. Like here's the thing, I don't see any low float trader out there posting multi-million-dollar months. Like I'm not saying there's not $1 million out there, but like in this stuff, and I'm not opposed to low floats. I trade low floats. I trade everything. My whole point with the broken slot machine is I just want to go to wherever the best edge is. Sometimes it's low floats, sometimes it's futures, sometimes it's Forex. But whatever it is, I want to go to what's making the craziest moves. And a lot of time it also is large cap stocks, right? Like we've seen epic moves in CRWV, in Tesla, in UNH. And to not trade those or to ignore those to me is ludicrous because those are the trades where, especially if you scale your business, you can make $1 million in these, you can make $10 million in these. And so for a lot of people, you're just kind of like, you're limiting yourself when all that matters is expected value. I am just if there's any church I subscribe to, it's the church of expected value. Whatever has the best expected value is what I want to trade. And if it's a low float, I will be trading it. If it's a mega cap, I will also be trading it. And so it just so happens that Tesla during this was the broken slot machine, and this was offering the best moves. And so like you get this escalation in language from Elon, and you get, I mean, this 300, like many have seen me talk about what I call kind of like the bouncy ball short. This makes this really big leg, right? That's a pretty damn big move for Tesla. We then sit on 300, making lower lows we make lower highs against this kind of 300 level. We then break it, and oh my God, does this end up unwinding as the rhetoric is just reaching a fever pitch. I mean, you have Elon, essentially accusing Trump of inappropriate conduct with Epstein. Like that is like, you are going to be raising the ire of kind of Trump and all of his repercussions. And so this, like, you can easily make $1 million in this move. Not only that, but with options, you can just magnify that with very, very defined risk. Then we get somewhat capitulatory, and this even this counter leg, like I want to be there for stuff like that. So those are some of the amazing opportunities that you can get in just whatever's moving, and just the liquidity on this is incredible.
Yeah, and just so many concepts there. I mean, between the waterfall pattern, then you have the right side of the V, and I know someone in IU, Stan, he really capitalized on that. Right side of the V swipe up on Thursday afternoon after the capitulation. So
Yeah, this was actually oddly enough, like, I mean, I think here's the thing. If you were short biased, like that could not have panned out better. Like literally to have them, I mean, that just reached pure, like everything's up in flames and like it's all imploding. Like that was the outside of them literally just like screaming F you to each other and doing something crazy, and just, that was like as nuclear as you can get in 24 hours. And so that panned out just so amazing. And the technicals were all there. But then oddly, like, I think the short was a little, minus this break here, it was a little bit hard because you just don't know. You're so dependent on the next tweet. But this long was actually where I did best. So I respect the move, Stan.
Absolutely. So, Lance, you've given very generously your time. I want to make sure that we are respecting that. This has been an amazing conversation, and I definitely want you to come back onto Sunday Scan at some point in the future. So, do you have any kind of parting words or thoughts about traders as they look for the moves in the upcoming week?
Yeah, I mean, I think if you want my true thoughts, which might not be the most loved thoughts, I think the most important thing is you always want to learn how to fish. And it's not going to be for everyone, and trading's not for everyone. And most traders kind of, it's a tough job out there, and that's okay. But I would say, like, if you really want to succeed at this job, you need to do the hard work, and there will never be any shortcut. The only shortcut you can get is finding good community, good mentorship. But nevertheless, no one can ever lift the weights for you. No one can ever do the hard stuff for you. And so studying what these trends look like, studying what capitulation looks like, studying and developing your own strengths and systems, nobody else can do that for you but you. And sadly, that's just how life is. But that's also the beauty of life, is that nobody else, if you build that skill set, it has value and no one else can replicate that. And so I urge you all to do the hard reflections, figure out what is my unique edge and how can I refine that? And it won't be easy. It will take thousands of hours, but then ideally you have built a skill set that will reward you for the rest of your life. But ultimately, you got to do the hard work, and we can all just guide you, but you gotta do it.
Absolutely. And that's something that IU is trying to do, try to teach people how to fish. But like you said, they are the ones who have to put in the reps, and it takes thousands and thousands of hours to really get those reps in, and no service or nothing can do that for you, but they can do it alongside you. So Lance, before we wrap up, what do you have coming up? I know that you have some newfound YouTube efforts, and then also, do you have any events coming up, or how can people get in touch? I'm doing the hot ones here. That camera, that camera, that camera. What do you have going on?
So let's see. So I will be at a San Diego meetup for Traders for a Cause. I believe that is July 17th. So if anybody wants to hang out, have some tacos, some beers, talk trading and talk shop, July 17th for a San Diego meetup. I will also be trying to become the greatest finfluencer of all time and be pumping out a lot of YouTube content over the future. So if you're interested in more free content and checking out some of my stuff, youtube.com/@the1LanceB.
That sounds great. Lance, thank you so much for your time. It was great chatting with you, and we'll talk soon.
Yep. Thanks, Chris. And go IU and Nate. And I miss you. And I hope Grok tells you that.
Thanks.
Thanks for having me. Bye.
Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.